Stop scrolling. A significant shift is coming to Social Security payments in March, and the vast majority of recipients haven't received clear communication about it. Not from the Social Security Administration, not from media outlets, not from any official source. Those who discover these changes after they occur, rather than being prepared beforehand, will likely spend days feeling confused, frustrated, and in some instances, genuinely alarmed that their payment has been compromised. The reality behind these changes is far simpler and considerably more significant than initial panic suggests. March 2026 represents an unusual month for the Social Security system. This has always been the case. Modifications authorized months earlier are now appearing in the actual bank accounts of individual beneficiaries. These modifications include increased amounts for some recipients, altered payment schedules for others, and adjusted deposit totals that will take many beneficiaries completely by surprise unless they have been properly informed. Being prepared in this situation determines whether you experience confidence or anxiety. When you check your banking application and discover an unexpected figure in your account, here is what is actually occurring behind the scenes and why this matters beyond the typical yearly adjustment discussion. The most substantial modification reaching Social Security beneficiaries in March relates to provisions that remained in effect for over 4 decades. During this period, countless Americans employed in public service positions, including educators, firefighters, law enforcement officers, government employees, and public hospital nursing staff, received Social Security benefits that were quietly and systematically reduced by 2 regulations embedded within federal legislation. These regulations were known as the Windfall Elimination Provision and the Government Pension Offset. Most individuals impacted by these regulations never fully comprehended them. They simply recognized that their Social Security payment fell short of expectations and accepted this situation as unchangeable. That situation has now changed because both regulations have been eliminated. The legislation removing these benefit reductions was enacted in late 2024. Since that time, the Social Security Administration has been processing recalculations continuously. During March 2026, a substantial portion of these recalculations is reaching beneficiary accounts, meaning retired individuals who experience reduced payments for years are now unexpectedly viewing larger deposits. Some recipients are experiencing monthly increases of approximately $100, others approximately $200, and some substantially larger amounts depending on how long the provisions affected them and their pension size. Additionally, alongside these monthly adjustments, numerous beneficiaries are receiving retroactive lump sum payments covering every month. They received insufficient benefits following the legislation's effective date. Consider what this represents for a retired educator who dedicated 3 decades to classroom instruction, contributed to her state pension system, and spent 6 years observing her Social Security payment arrive approximately $300 lower than her earnings record indicated it should be. 6 years encompasses 72 months. A retroactive payment in such circumstances does not resemble a standard deposit. It appears as though an account error has occurred until the recipient understands its true nature. For someone receiving a $300 monthly shortfall over 72 months, that retroactive deposit could approach $21,600 before considering any additional adjustments. Such an amount landing in a bank account without warning would understandably cause concern for anyone not expecting it. This situation extends beyond individual teachers and government workers. Many households affected by these provisions structured their entire retirement budgets around the reduced amounts they were receiving. A sudden increase, particularly when accompanied by a substantial retroactive deposit, can fundamentally alter someone's financial picture overnight. Some recipients may find themselves facing questions about Medicare premium adjustments based on higher income tiers they did not anticipate reaching. Others may need to reconsider their tax withholding positions as larger monthly benefits and retroactive payments could create unexpected tax obligations when next filing season arrives. Understanding these cascading effects matters just as much as recognizing the initial deposit change itself. If you held any public sector position during your career, meaning any job where your employer maintained its own retirement system rather than contributing to Social Security, You must determine immediately whether your benefit was reduced under either regulation. Do not rely on assumptions. Contact the Social Security Administration directly at 1-800-772-1213 and specifically inquire about this matter. If you are entitled to a recalculation that remains unprocessed, following up accelerates the process. Waiting prolongs it unnecessarily. When you call, have your Social Security number readily available, along with details about your public sector employment history, including dates of service and the name of your pension system. This information allows representatives to locate your record efficiently and provide accurate answers about your specific situation. Turning now to the second modification occurring during March. This concerns payment timing and affects every beneficiary, regardless of employment background or pension status. The Social Security payment calendar operates around Wednesdays. Your specific payment date depends on your birth date. Individuals born between the 1st and 10th receive payments on the month's second Wednesday, which during March falls on the 11th. Those born between the 11th and 20th receive payments on the third Wednesday, occurring March 18th. Beneficiaries born between the 21st and 31st receive payments on the fourth Wednesday, taking place March 25th. Supplemental Security Income recipients already received their March payment on February 27th because March 1st landed on a weekend. This remains straightforward. However, confusion arises annually, particularly during months like March when additional modifications are happening concurrently. When your payment date arrives and your deposit differs from the previous month, whether higher, lower, or accompanied by an unexpected additional deposit, most individuals instinctively contact their financial institution seeking explanations. Financial institutions cannot provide these explanations. They simply transmit whatever amount the Social Security Administration sent. The explanation exists at ssa.gov or through 1-800-772-1213. Understanding this beforehand eliminates countless frustration hours. Payment timing confusion multiplies when beneficiaries do not realize that bank processing times can vary. Some financial institutions post deposits the moment they receive them, which might be late evening before the official payment date. Others wait until the following business morning. Still others have specific cutoff times that determine when funds become accessible. A recipient expecting their payment on March 11th might check on March 10th, find nothing, and begin worrying unnecessarily when their bank simply has not processed the incoming transaction yet. Knowing your bank's typical posting schedule for Social Security deposits provides additional peace of mind during months when attention on payments intensifies. The third modification concerns net payment amounts. Specifically, the figure actually deposited into your account following Medicare Part B premium deductions. This figure matters most for your household budgeting, and it surprises the largest number of people annually when reality diverges from expectations. Here is the calculation that creates confusion. The 2026 cost of living adjustment added 2.5% to gross Social Security benefits. For an individual receiving $2,000 monthly, this represents a $50 increase on paper. However, Medicare Part B premiums also increased during the current year. If your premium rose by $10 monthly, your net deposit increase becomes $40, not $50. If your premium increased more than your cost of living adjustment gain, which occurred for certain higher income beneficiaries, your March net deposit might actually fall below your December amount despite the cost of living adjustment increase. This situation does not represent Social Security Administration error. It reflects two distinct systems, Social Security and Medicare, making simultaneous adjustments that interact within your net deposit. Understanding this interaction transforms a confusing bank statement from an unnecessary telephone call or unwarranted concern into comprehensible information. Additional factors can influence net payment amounts beyond standard premium deductions. Some beneficiaries have Medicare Part D prescription drug plan premiums withheld directly from their Social Security payments. Others have court-ordered garnishments for child support or alimony. Some have voluntary withholdings for Medicare supplemental insurance or prescription drug plans. When multiple deductions combined with COLA adjustments and premium changes, the resulting net deposit can appear almost unrecognizable compared to previous months. Taking time to review your complete deduction picture prevents misunderstanding and potential financial stress. Income-related monthly adjustment amounts represent another layer affecting higher-income beneficiaries. Medicare Part B and Part D premiums increase for individuals whose modified adjusted gross income exceeds certain thresholds. These income-related adjustments are calculated using tax returns from 2 years prior, meaning 2026 premiums reflect 2024 income. Beneficiaries whose income decreased significantly since 2024 may qualify for reconsideration, but only if they request it. Knowing whether you fall into this category and understanding how to request reconsideration could substantially affect your net deposit amount. Access your My Social Security account through ssa.gov during the coming week. Examine your gross benefit amount and your net deposit amount separately. Understand what deductions are occurring and why. If the figures do not match your expectations, you now possess the framework for understanding why. If something appears genuinely incorrect rather than merely different, you possess the information needed to ask appropriate questions when contacting officials. Your online account also provides access to your official benefit statements, payment history, and estimated tax forms, making it an indispensable tool for monitoring your benefits throughout the year. One additional March consideration deserves attention. The Social Security Administration is distributing adjustment notifications, recalculation letters, and, in certain instances, retroactive payment information through postal mail during this month. These documents are being sent to the address recorded for your account. If you relocated during the preceding year without updating your address specifically with the Social Security Administration, not merely through postal service forwarding, these documents may not reach you. Mail forwarding orders do not reliably redirect official Social Security correspondence. Access ssa.gov today and verify your mailing address, banking information, and contact details remain current. These notifications contain important information that affects your understanding of current and future payments. Recalculation letters explain exactly how your benefit was recomputed, what factors changed, and what new monthly amount you should expect. Retroactive payment notifications detail the period covered, the calculation method used, and the total amount being deposited. Losing these documents means losing access to information you might need later when reconciling payments or answering questions from financial institutions or tax professionals. Beyond address verification, ensuring your direct deposit information remains current prevents payment disruptions. If you changed banks recently or closed an old account, updating your information with the Social Security Administration well before payment dates prevents funds from being rejected or delayed. Even minor errors in account or routing numbers can redirect payments into someone else's account, creating complications that take weeks to resolve. Taking 5 minutes to confirm your details now saves potentially months of frustration later. March is delivering legitimate financial resources to individuals who awaited them extensively. It is simultaneously delivering confusion to individuals unprepared for what an altered deposit amount signifies. The distinction between these experiences rests simply on knowing what to observe. For those receiving increased benefits due to repealed provisions, this March marks the beginning of a new financial chapter. For those simply navigating standard COLA and premium adjustments, it represents another routine update in the annual benefit cycle. Either way, understanding what is happening before it happens transforms potential anxiety into informed confidence. Take action this week. Call the Social Security Administration if you have public sector employment history, log into your online account regardless of your work background, verify your personal information, review your benefit details, and familiarize yourself with how your payment is calculated. The few minutes this requires represent an investment in your own financial peace of mind. When March arrives and deposits begin appearing, you will be among those who understand exactly what they are seeing and why. That understanding is worth far more than the effort required to obtain